Good afternoon, traders. This is Bob Haberkorn coming to you from RJO Futures in Chicago on Tuesday, December 18th. Here to talk about the Q3 GDP number that's coming out Thursday. It's going to be the revision, so it'll be the final number that we'll see. It comes out at 8:30 Central. Expecting it to come out around 2.8. That's the consensus. We've heard ranges from 2.6 to 3.0, but 2.8 for all purpose sake, right in the middle, is probably where we're going to see it come out. The last number for Q3 GDP was at 2.7, so we'll see what comes out. I'm here with Kevin Craney. Here he's going to discuss the bond market, as well as Jim Barrett, who's going to discuss the equity markets. Kevin, what are you expecting on for the bond markets?
You know what? We've seen some real deterioration in bond prices this week, and I think a lot of that has to do with what's coming out of Washington, D.C. That's really driving a lot of markets, specifically the bond market. We do see both sides kind of coming to an agreement, what appears to be an agreement. We won't say an agreement until we see everything signed and moving forward, and I think that's what's driving bond prices down, a little more risk-on environment when you look at equities and commodities. But really, when we look at this GDP number, I don't think it's going to have that big of an impact on the bond market. This is the last revision to the third quarter.
Thursday before Christmas.
Thursday before Christmas. You're looking for a 1/10% increase in the numbers. But really, you have to look at the deterioration of the composition of the GDP number. The last revision we saw that there was a bigger spike in inventory than there was in actual physical demand or people going out and buying things. So I think we have to look at that deterioration in the composition. Will that flow through to the fourth quarter as well as other quarters in the new year? Is there really a drag on the economy? If we don't, God forbid, we don't get something done on this fiscal cliff, it could really have a drag. We could see these bonds turn around, and I think bonds are really starting to find a little bit of a floor down here. Probably look like it'd be an area to nibble on a little bit.
Yeah, I mean, they definitely look like they are forming a base here with some good support on the 30-year and the 10-year. Jimmy, what are you looking at on the equity side? I mean, they're up a lot today again.
Yeah, they're up a lot. I agree with Kevin. The GDP number is definitely overshadowed by the political events. Things look like they're willing to speak to each other. There's a bit of movement, a bit of bending toward an agreement recently, and obviously the stock market has caught a whiff of that and likes it. The market's always looking forward. Next year's GDP and even the year after is more important to the market than what GDP is going to be Thursday. And so really the focus is almost entirely on this deal. Can they solve all the Republic's long-term fiscal problems before Christmas? Of course not. But that's really not the issue. The issue is things look a lot better than 3-4 days ago. Therefore, the sort of serious breakdown in notes and bonds over the last day or two, and we have equity prices approaching spring highs.
Yeah.
So.
Well, in precious metal markets, I'm not expecting too many fireworks based off the GDP number. We are hitting some fireworks today, that's for sure. Right now, it looks like gold's going to test out of that 200-day. It's getting really close, about $2 away. So keep an eye, see if it holds there. But for the GDP number, unless it comes out, way out of line with expectations, I don't foresee happening. Being that it would trade to be above 3 or below 1.6, I think you would expect, you could maybe attribute some type of a move on gold on Thursday to that. But I'm not expecting too much, especially going into the holiday weekend, and volume will continue to get lower and lower as the week goes on. So, key thing is see what it comes out like. 2.8 seems to be kind of the number that we're looking at, targeting. Be interested to see. Definitely looks like, definitely Washington, D.C. right now is overshadowing anything in the markets number-wise that's been coming out for the last week or so. So we'll see how it plays out, although I think we're the consensus there will be a minimal effect in the market come Thursday morning. Remember, futures trading does pose significant risk. It's not suitable for all investors. If you have any questions, please feel free to contact any of us or follow us on Facebook and on Twitter. Have a happy holidays and a great weekend, and be profitable in the next year.
Happy holidays, everyone.